This is Dan Zwicker with your technical comments here for Thursday, April 23rd, 2015. Today I thought I'd take a look at the July 15 soybean futures chart, something that I've been kind of watching from a technical perspective over the past several weeks is what technicians call is a broadening bottom formation that's been kind of developing here on this old crop soybean chart. And what technicians mean by a broadening bottom formation is that you have a series of lower lows and you combine that with a series of higher highs. And whether or not this is at the bottom or at the top, since it's at the bottom, since we're coming off of a yearly price low here that was posted a couple weeks ago here with this E, one would call this as a broadening bottom formation. Now what makes this a little more interesting is with the price action that we've had since we made the low here at E, is the market has been able to move above the halfway point of this formation here, or this reverse triangle formation or broadening bottom formation. And then with today's push above the early week high of 983, that really shores up this formation as at least a potential to have some punch in here that could give soybeans a pretty good rally as we move on into the first part of May or so. But the first thing here is I want to talk about is using Monday's high point of 983 and Wednesday's low here of 966. Kind of take the midpoint of that as 974 and kind of swing it off of the low here that we made at E, which is 949. So I would take this 974, subtract 949 from that, that's 25 cents. I would add 25 cents here on the 974, and all of a sudden you get an upside target here about 999. So if we could get that to be met, that would put us close above this 997.5, and then that would open up the gates then for a doubling of the width of this widest part, which is 48 cents. You'd add 48 cents onto 997, and then that is where you get the upside target here about 1045. A couple things though I think we need to do. First things is get a close above this 50-day moving average here. This is this dash line that's pink. That comes into play this week here around 987, 988. So if July soybeans could muster a good solid close above this 988 level, 989, then that would kind of shore up the prospect that the swing objective up here around 999 could be met. And of course, if 999 is met, then we've popped above the widest part of the top end of this broadening bottom, which is 997.5. So it's kind of like a string of dominoes. If one falls, the next one falls, and the third one falls. And if that is the case here, what chartists will do is take this 48 cents at the widest part here, add 48 cents onto the top end of this range, which is 997, and then that gives us an upside target here about 1045. Another formation that a lot of technicians watch is on the technical indicators is down here below here. We watch for divergences to occur. And we did see a divergence here in both RSI and the stochastic indicator. This low here in mid-March that's associated with A on the price chart sits here, and then the low associated here with E, which prices made a lower low, but your technical indicators made a higher high. So that is what we call as a bullish divergence, and the initial reaction to a chartist would be that the upside target would be to punch out the high associated with the high in the technical indicators, and that would be D here. So based upon a bullish divergence formation on the stochastic and our RSI indicator, does call for a move above this 997 high. And if that occurs, then again that triggers the upside target here about 1045. Well, that's all I have here for today as far as the technical comments go. But this is, in closing, I do need to remind you that the opinions here on this chart formation are those of my own and not those of CGB Enterprises or any of their affiliated companies.